Hello and welcome to the Accendo Traders Group. This is our weekend wrap-up trading plan for May 29, 2010. Our website is blog.accendotrader.com, where we put together effective video technical analysis trading plans. Well, what are some key components? We divide our trading plans up into 4 areas: trade direction, location of your trade, triggers, and how you manage the trade. We believe those are the 4 key components to any successful trading plan. And of course, you can get into our trading system to find out more details about that. So, as we already showed earlier in our video, we want to thank all of our armed services folks to keep us safe and keep us, allow us to do what we want to do while they put their lives in jeopardy. So certainly happy Memorial Day. Make sure you shake somebody's hand. The week that was, the market was split. The Dow was down a little bit and the NASDAQ was up. And primarily that's because of what was the driver this week. The driver of the week was really overseas news. Global concerns impacted the market. So we saw 5 of our 10 major sectors rise this week, led by small cap. But we're ending the month of May with the S&P falling 8%, which was the biggest decline in a year. So we didn't end on a strong note. The old saying, sell in May and go away, may be in place here. So as we already stated, the overseas news is what kind of controlled the market for the week, starting off with Spain's central bank taking control of a regional savings bank, CaixaSur. That started the market on Monday on a negative note. Then we had some rising tensions between North and South Korea again over sunken ship and whether or not North Korea had a part of that. That tension had some selling pressure on Tuesday. And then we had China reassure investors that it will continue to diversify its investment in foreign currencies, and the market rallied. And then once again, Spain and the overseas came in again when Fitch downgraded Spain's sovereign debt to a AA from AAA. So overseas news controlled the market. Probably why we didn't see much move up or down. Economic data for the week was housing control. We had existing home sales, new home sales, the Case-Shiller index. A lot of that, again, focusing on housing data. We also had the first quarter GDP revised lower to 3% from 3.2%. So not a lot of economic data also, again, to move the market. So, and of course, we had this 3-day holiday weekend. So Friday, a lot of people probably just took off after the morning. No corporate news. Earnings season's basically over. We'll start over again. And as we look at this upcoming week, we can see we've got a couple of things. But on Thursday, we have ADP employment, and we have non-farm payroll and unemployment on Friday. So we have some jobs data coming out on Thursday and Friday this week that can impact the market, especially, again, we're expecting the market to continue to expand job-wise, and so that can add some oomph to the market. But again, the market is closed on Monday for Memorial Day. So on Tuesday, nothing big really going on. So we'll see, again, if something overseas will start the market up or down. Just want to go ahead and take a moment to remind you guys that the Accendo Trader 30-Day Challenge will be beginning on July 1st, 2010. Again, beginning of July, we will start our Accendo Traders 30-Day Challenge. And those of you who have participated before know that it's just a month-long series, educational series on getting people up and going and trading. A video will be posted each night. We want to get the feedback, people posting questions and helping each other move along as attempting to become better traders. But this 30-day challenge, compared to the ones in the past, will have a futures slant to it, learning how to get started trading futures. So again, July 1st, our first video will pop out there. Accendo Traders 30-Day Challenge. Watch the video, post your questions. Let's start our community. And then each Saturday in July, we will have a free webinar where we'll come together as a group and answer any questions as a large group also. So again, Accendo Traders 30-Day Challenge, July 1st, 2010. Now we're going to switch over to the S&P 500. Let's get on back to the daily chart. And we're going to see, again, the February low holding up as support. That's great. That's going to be at that 10,050 level. It was retested once again this week and held up. And we did retrace back into the 10 moving average, but again, once again, we'd like to see us get up to the 20 moving average. So 10,050 is below us. That's where buyers are saying, okay, this is a good level to get in. This is a good place to buy. Now, when we shrink down to the 60-minute chart, as we did on the NASDAQ, we can see that this 1100 level is our resistance for the week. For Wednesday, Thursday, and Friday, we weren't really able to close above 1100. So there are our two key points for this upcoming week, especially as we look at the jobs data. Again, 10,050 below us and 1100 above us. So let's switch over to the NASDAQ. Back on the daily chart. And we can see the same story. I'm a repetitive record here. But on the bottom side here, we can kind of see a 2120 level as support. If we go with our fat finger Wednesday, it's more like 2150 acting as support. Retracement back up to the 20 moving average. And we would like to see us go higher. We'll come on down to the hourly chart, and we can see that our resistance is right around 2275. So 2275 above us and 2150 below us. 2250 above us, 2150 below us. Now, one thing we'll do is just take a quick second and go backwards, and we can see that our three amigos, the three musketeers, whatever you want to call them, are somewhat bullish, suggesting that we are putting in a bottom. But again, that doesn't mean we're going to retest the highs. It just means that we are positive we found some support levels below us. So the NASDAQ, we can see that. MACD getting ready to angle back up. Stokes already heading up. And RSI in between, but heading up. We'll go back to the NASDAQ. I'm sorry, to the S&P 500. We can see stochastics already up. MACD wants to head up. RSI heading up. So again, the bottoming of this, where we are right now, and maybe bottom is not a good word because again, we're not saying we're going to retest the highs, but we are saying that the February lows are acting as support. Stochastic heading up. MACD wants to head up. And RSI the same. We are going to begin by looking at the Dow Jones on a daily chart. And the first thing we're going to see is kind of a confirmation of what we said last week. Last week we talked about the importance of the February lows, and that held up. We talked about the importance of 9,900, and that held up. This is a place where buyers are saying, okay, this is a good place to buy. So 9,900 is once again holding up. We also talked about the importance of that we have thrusted down too much, we have pushed lower too much, and we need to retrace back to the moving average. So it's nice to see that we pull back to the 10 moving average, but I'd like to see us move up to the 20 moving average before we go lower. And that matches up with this push lower here in the middle of May. So it'd be nice to see us get back up here to this 10,400 level. However, when I shrink down on the Dow Jones to an hourly chart, we see something else. We can see, so we moved up nice from Tuesday to Thursday, and then the 50 moving average held up as resistance on Friday. However, this layer of resistance, where is it at? Well, it's about 10,200. So you can go with this 10,200 level, or we can go with this little peak here on Thursday, which is 10,260. So that's an area of resistance. So we got 9,900 below us, and we got 10,500 above us on the Dow Jones. For our YouTube folks, we have come to the end of our time. Please consider to download our free podcast so that you can take full advantage of all the free information that we give you. But we do have some partners we want to talk with you guys. We've got a great futures trading room, 88% success rate in all calls. They usually use 3 to 6 contracts. Right now, they got a great promotion, a $100 discount. If you sign up through us, you get 5-day free trial. You can see they are great this week, but remember, results are guaranteed. You got to trade your own risk. And more importantly, we always talk about this, you've got to be able to trade the system for yourself. If you're going to trade futures, we got a great futures broker for you. Interday e-mini margins as low as $300. And again, if you sign up through us, 20 free contracts. a great charting platform for you that you can design your own filters. And of course, we have a great futures turnkey trading system that help jumpstart your trading. Again, YouTube folks, download our podcast. It's free. Don't forget about our 30-day challenge starting on July 1st. And of course, please donate to consider to contribute and to support all of these great free videos. Trade at your own risk. You can lose all your money, and I'll see you next time.